Hi, this is Andy Hoffman of CryptoGoldCentral.com and the World Crypto Network. It's Tuesday morning, April 17th, and now that tax day has passed, which I say in quotes to mock the silly mainstream media fabricated notion that U.S. tax-related selling significantly contributed to recent cryptocurrency weakness, it's time to more broadly discuss what I trumpeted in last Thursday's self-explanatorily titled audioblog, The Crypto Bear Market is Over. The principal reason for today's discussion is my increasingly public feud with technical analysis gurus, which I also say in quotes as there's nothing personal about anything I'm doing. To the contrary, my reasons have nothing to do with pride, revenge, or establishing my brand, but instead to help Bitcoin investors, new and old alike, to see through the noise and FUD and realize that Bitcoin is not only the most far-reaching, value-adding innovation in financial history, but on the cusp of viral global adoption. OGs, or old grizzled veterans who have been through the Bitcoin wars and countless violent price plunges, know this well and need little or any encouragement. However, the vast majority of investors are new to the space, many of whom are still in the red because they entered in the latest bull phase's final stages. They are the ones most vulnerable to deifying well-known personalities, several of which focus partially, or in many cases primarily, on trading techniques with no proven track record, which irrespective of their validity are guaranteed to wreck 90% of those using them. Not to mention create FUD that permeates a space already prone to violent price plunges at a time when stability and unity should be promoted. In Bitcoin's case, every imaginable fundamental factor is bullish, with essentially nothing to fear or worry about. At a time when, using the Mayer multiple as a proxy, its price is at nearly its lowest ever level relative to its 200-day moving average. This, along with the starkly bullish price action of the past week, which couldn't scream louder that the same institutions that supported the price at $6,000, i.e. the $100 billion market cap they initially entered the space at, is what prompted, by very loud public calls last week, the bottom was in at 6,600 to 6,800. And after Thursday's historic price surge, featuring the highest ever hourly Bitcoin trading volume, my call that the end of the crypto bear market had arrived. Then, of course, we have the other giant pink elephant in the room of the dramatic altcoin surge and outperformance relative to Bitcoin since that day, which cumulatively has caused Bitcoin's market cap dominance, which I also say in quotes, given the fraudulent, overstated market caps of countless pre-mined altcoins, to plunge in less than a week from 45% to 41%. In other words, whether you believe in altcoins or not, price action is screaming equally loudly that capital is returning to the crypto space, yielding the animal spirits that, like it or not, characterize a bull market. Just look at the platform space, as personified by the hype around the upcoming EOS launch, if you don't think so. So yes, make no mistake, the hardcore Bitcoin maximalist speaking to you right now believes unequivocally that not only is Bitcoin in a bull market, but the entire cryptocurrency space. To that end, the aforementioned Twitter wars I've declared on TA gurus and anyone else focused on activities that might separate investors from their Bitcoin. One particular guru has been my target, not because of anything specific to him, but the fact that so many follow his advice, or more aptly put, are put into a perpetual state of fear by the fight he continues to create, inadvertently or otherwise. On the topic of technical analysis, I think it's funny how people think people like myself are amateurs on the topic simply because we don't take courses to get certified. Yes, silly as it sounds, and as damning of a statement of how scam-infested the education business has become, there are actually degrees you can receive in technical analysis if you pay enough money, i.e. the CFT, or Certified Financial Technician, as administered by the International Federation of Technical Analysis, or the CMT, or Chartered Market Technician, handed out indiscriminately by the Market Technicians Association. It costs a lot to achieve, and it's nearly impossible to fail. And once you're certified, you join a workforce of people, essentially all of whom simply invest their own money, all looking for the exact same things in a business where ultimately an understanding of fundamentals and control of emotions is all that really matters. Unfortunately, only a tiny minority understand concepts as simple as Economics 101, of which an even tinier minority have the ability to control the powerful human emotions that prompt 90% plus of all traders to buy high and sell low. Back to my amateur status, I bring this up because people mistake my Bitcoin maximalism with a lack of understanding of technical analysis. To the contrary, I have as much experience in the topic as anyone, having worked 3 decades in the financial markets with a chartered financial analyst or a CFA designation to boot, which I assure you is a lot harder to get than a CFT or CMT. As a bond trader at Cantor Fitzgerald, a stock trader at a large Manhattan hedge fund, and a sell-side equity analyst at Capital One South Coast and Solomon Smith Barney, I was knee-deep in every imaginable factor affecting stock and bond markets. And since 2002, I've been one of the world's leading alternative financial media commentators on precious metals, working 6 years in investor relations for public mining companies and 6 years as the marketing director of one of America's largest bullion dealers, in which my specialty was the uncovering of market anomalies and manipulations. So while I don't have a CFT or CMT education on the arbitrary factors real traders look for, despite having not a clue how to interpret them, I am as aware of basic TA tools as anyone in the financial business, which I properly use not as the end-all of my analyses, but a tool to validate and reinforce my fundamental views. Read my tweets and you'll see I know as much about TA as most sector analysts, which unlike many of the sector's top gurus who have been unerringly bearish in the mid-6000s, publicly called for a near-term bottom at those very prices. Not because I read charts, but because I simply observed the market for signs it was becoming sold out. Throw in the aforementioned strength in altcoins, and it doesn't take a degree to realize capital is returning to the space at a time when Bitcoin has never been better positioned fundamentally or more undervalued. Back in 2002, when I first entered the precious metal space, one of my must-reads was a fundamental analyst named Richard Russell, who recently died at nearly 100 years of age. His newsletter, the Dow Theory Letter, focused on both fundamental and technical factors, but ultimately was dominated by his quest for, as he called it, the primary trend. In other words, if you can tell what's in a bull or bear market, you should invest as much of your net worth in it and do the pre-crypto equivalent of hodling, i.e. buying and holding. Sure, he loved his technical analysis. After all, his newsletter was named after Dow Theory, one of the earliest, most widely watched, and ultimately obsoleted forms of technical analysis, which became that way precisely because too many people used it. That said, he always understood that identifying the primary trend and subsequently buying and holding was the best way true riches are made. Not to mention the compounding of that wealth with interest and dividends, which in cryptocurrency can only be achieved by holding Bitcoin. Thus, when I see the top TA gurus using methods that have become so widely watched, they might as well be part of the CMT and CFT curriculum, I have to laugh, as like Dow Theory, they are already becoming obsolete. And by they, I mean, for example, the numerical indicator that continually predicts price plunges that never occur because A, too many people are using them, and B, crypto's primary trend has changed from bearish to bullish. Oh, there are still thousands of disciples desperate to have random price movements explained systematically by charts or demagogic figures with huge Twitter followings and big voices, or heck, the webbot, due to their inherent emotional weakness and or lack of understanding of the factors behind Bitcoin's fundamentals. However, with each passing day, more and more will realize that in fact the primary trend has changed, and thus the only thing going for bearish TA predictions, i.e. a bear market, is no longer present. At this point, perhaps any day now, the herd will turn 180 degrees on a dime, like the dinosaur herd in Jurassic Park, in realizing at much higher prices than today that crypto's primary trend is now bullish. And this time around, it will be a far more powerful trend, as unlike last year's price speculation boom, this one will be focused on speculation about global Bitcoin adoption. Thanks, and have a great crypto day.